a full agenda today, as everybody knows, so we want to not waste any time and get right to it. And I'm going to ask the secretary, please call the roll.
Senator Rocky Adams, Senator Alvarado, Senator Douglas, Senator Girdler, Senator Howell, Senator McGarvey, Senator Parrott, Senator Schickel, Senator Smith, Senator Storm, Representative Bentley, Representative Fisher,
Here.
Representative Flannery, Representative Fraser Gordon,
Here.
Representative Gooch, Representative Hatton,
Here.
Representative Kirk McCormick, Representative Koenig,
Here.
Representative Cole Carney, Representative Lewis,
Here.
Representative Lockett,
Here.
Representative McPherson,
Here.
Representative Meredith, Representative Pollock, Representative Roberts, Representative Santoro, Representative Smith, Representative Stevenson, Representative Upchurch, Representative Westrom, Co-Chair Carpenter, Co-Chair Rowland.
We have a quorum. We're ready to conduct business. I'll start off by getting a motion for the approval of the September 20th. Got a motion. Do I have a second? All those in favor signify by saying aye. Any opposed? The minutes are approved. Thank you. Well, another busy agenda for us, and so we don't have a lot of meetings. Representative Rowland and I agree upon that, so when we do have them, we make our time count. So I'll get started now with our first presenter with the Department of Financial Institutions update. Commissioner Burris, I believe you can fill us in on everything going on, Commissioner, or in your official title for now, or whatever.
I will correct you there. I'm Deputy Commissioner.
There we go. Thank you for coming.
Well, thank you, Chairman Carpenter and Chairman Rowland, for the opportunity to speak on behalf of the DFI. Chairman Rowland, as I think this is your last BNI interim, I just want to say thank you for all you've done for the Commonwealth and what you've done for the department and your willingness to work with us over the years. So thank you. I will try to be brief today, and if I've learned anything from law school, if you're first, stick to the facts, and you leave all the hard questions to people who follow you. So sorry, Commissioner Clark. I'm going to give an update on each division today and go. Sorry about that. I'm going to give an update on each division, go over a case study from one of the actions we took as a department on the security side, and finally I'm going to end with, going over a potential reorg of the department. First things first, I know that obviously people they weren't used to seeing me out here. I do want to say that, the commissioner has left the department. He's been on the commissioner for 14 years. And no offense to Ballard, I don't think I saw him out there, but I think Charles will probably go down as the best commissioner that we've had at the department. So I think he's probably watching today because he probably can't help himself. So I just want to say to him, thank you for all that you've done for the department, the Commonwealth, and for me personally. You will be missed. The other elephant in the room that I want to talk about today is the overall economy and its effects on the industries that we regulate as a department. The common theme that will affect every division update that we give today is going to be sort of inflation and everything that's driving inflation on these industries. So I guess the first chart I have here is the U.S. Yield curve. And if you look very closely, I know it's pretty hard to see, the 2-year and 20-year yield curve is inverted. Most people go by the 2 and 10 as an indicator for an impending recession. If I had an updated graph here, you would see that the 2 and 10-year Treasury yields are inverted, probably as deep as it's ever been, I guess, since 2000. And that's an indicator, as Chair Powell would say, pain is on the way. And that sentiment is going across to the community bank sentiment index. So this is a questionnaire that's sent out each quarter to community bankers across the nation. And as you can see, Q2 of 2022 is at 84, and that is the lowest rank ever for this questionnaire. So if you look at the graph, 100 is just sort of neutral, and anything positive there is a positive sentiment, and then anything below 100 is negative. So as you can see, they don't have a positive outlook for the banking community. Let's see. So forgive me with this slide. I think that the 630 numbers are correct. Anything in the other years are not. Whoever put this together forgot to update those. So as you can see, we have 101 state chartered banking institutions here in the Commonwealth. We've lost 8 since 2022, or 2020, I should say. Of those 8, 3 merged with other state chartered banks, and 5 merged with out-of-state or federally chartered banking institution. But 2022 marks the first time in the department's history that banks over $1 billion exceed the number of banks under 100 million. All that being said, the department is seeing more complex and bigger institutions that we're regulating. If you look, the total loan volume has gone down from 2021 at the end of the year, but we're expecting that to tick back up given everything that we've seen as far as the quarter end reports. All right. The net interest margin continues to decline given prolonged low interest rate environment, increased earning assets funded by increased deposits from stimulus programs, and economic uncertainty. Banks with adjustable rate loans may just now be coming off the floor and raising rates significantly. So that's what we're seeing here in this. Tier 1 leverage capital ratio only declined by 4 basis points, but we're number 2 in this, and that's being driven primarily by asset growth outpacing capital growth. And we go to credit unions here. We'll see that the net worth ratio, only 3 credit unions actually experienced a decline in net worth from last year or the end of 2021. But you can see that we've gone down to number 3 from number 1 in that category. Just given the size of the institutions that we have in the credit union space for Kentucky, it just brings down that ratio quite significantly. The net interest margin actually increased from 2.36 at the year end 2021, while return on average assets declined from 0.73%. A decline in return on average assets primarily due to provisions of non-interest expenses increasing. So as we transition to the non-depository division, you will see that we've grown in our numbers of money transmitters. We've declined in our deferred deposit licensees, and the biggest sort of increase that we've seen throughout the pandemic and into 2021 and 22 has been the MLO space in the mortgage industry. We're getting indications now with numbers coming in that the MLO licensees for next year is going to be cut by about 0.25%, or a quarter. So we're only looking probably about 6,300 MLOs for next year. Given everything, the layoffs and everything that's going on in that industry. I want to take a look significantly at the mortgage industry because I think that's driving a lot of the non-depository space for us. As you can see, interest rates are on the rise, like I mentioned before. Chair Powell and the rest of the Federal Reserve System is pushing up interest rates to get a hold of inflation. And as you can see, the average fixed rate mortgage for the United States has gone up to 6.7%, and that's the highest since 2007. And it's only going to get higher from here. At the same time, we're seeing medium home prices throughout the United States decline, given that there's so much uncertainty in the market. As you can see from this chart, it's gone down by $30,000 in a month, and that's concerning, given everything that's going on in the macroeconomic environment. I guess one of the bright spots is our securities division. We're seeing a robust growth not only in the broker-dealer space, but in investment advisor space as well, which is surprising to me. In advising clients before I took on this role, I would have thought that you would have saw a shift from broker-dealer space to the investment advisor space, but that's not what we're seeing. We're seeing a robust, growth in this space altogether. So to kind of close us out here as far as the updates go, I want to talk about the Celsius case that the department took back at the end of, or close to the end of last year. So if you don't know anything about Celsius, they're in the cryptocurrency space. They market themselves as a bank, but they tell their clients, unbank yourself. So the old saying, it walks like a duck, it talks like a duck, but it's a pig. These are not banks. They don't function like banks. They don't custody assets quite like banks. They were basically telling people to deposit their cryptocurrency into this platform, and they would pay up to 17% APY paid each week on your deposit. These deposits met the definition of the Howey test, which means that they were securities under Kentucky and federal law. So being a security, you either have to get registered or you have to find an exemption from registration, and they did neither. So we took action against them in September of last year. At that time, they had over $18 million worth of Kentucky deposits on platform, and that would account for over 1,600 different accounts for Kentuckians. We took an action, like I said, in September of last year, and Celsius filed bankruptcy in July. But before July, in either at the end of May or the beginning of June, they froze all customer accounts, and so you were not able to deposit or withdraw your funds at that time. Because we took such quick action, at the time that Celsius went into bankruptcy in July, there was a little, roughly less than $3 million of Kentucky investor funds in that platform. So I know that on a day-to-day basis, you can't probably see what the department does, but that $15 million that was either moved off platform was saved from going to bankruptcy, and those investors getting pennies on the dollar when they came out of bankruptcy. So I want to show you all what we do on a day-to-day basis and tell you that we're working as hard as we can to make sure that everyone's in compliance. So to close you out, I guess the department is wanting to go through a reorganization next legislative session. And basically what that means for us is we're wanting to rename the non-depository division a different name, and then we want to set up a different division that focuses solely on IT and cybersecurity. That's going to, be outreach to the community or to the industry, and also helping in the examination process as far as IT and cybersecurity goes. With that, I'll open it up for any questions that you all have for me.
Well, Deputy Commissioner, we appreciate you being here. And I do want to say something about Charles. Charles, I've been here. This is my 12th session. This past one was. And so I've had experience and opportunity to work with him. He's done an outstanding job, and I think the department will definitely miss his leadership, but I'm sure they'll find able hands, and we appreciate your work today. But I just want to say that Charles has always been an asset for the legislative body to work with, and I know the financial institutions across the state will miss him and appreciate his service and his dedication to the Commonwealth. So I did want to say that for Charles. Are there any other questions? Being a former banker, Senator?
Thank you, Mr. Chairman. On the slide that you had about the Kentucky bank performance with the banks less than $100 million, the number decreasing, is that because of additional regulatory demands on small banks with cybersecurity and additional reg, or is this just a convergence-divergence cycle?
You're talking about this slide in particular?
No, sir.
Or
Go back
the
one
one
more.
before?
That one.
So I guess you're talking about the reduction in state charters.
Yeah.
I think it's a number of factors. You can't probably discount the regulation part of it, but I think it's succession as well. A lot of people wanting to do other things than stay at their bank, and we have a lot of banks with a lot of capital at the time. I guess throughout 2020, 2021, and they were looking for merge partners, and so with that extra capital in hand, they were able to do that.
Thanks, Senator Howell. As a bank guy, former banker, I should say, a lot of the regulations have really made it hard on our community, smaller banks, and it just they had to do the same thing if you were at a $35 million bank as a $1 billion bank had to do. So it really made it difficult for them to survive. And so I think that's what we're seeing on some of is, with all the deposits, you don't make a lot of money. I always said everybody in the banking world says, man, I have a lot of money with you. We're making a lot of deposits. I was like, we don't make a lot of money off of deposits, I hate to tell you. And so, I think that banks are seeing the opportunity to kind of take out some of the smaller ones, and folks are seeing that it's not maybe the greatest time to have a small bank in any state for that matter. So, that's something that we want to keep an eye on because we don't want to lose our community banks by no means. I know that's one of our concerns. Are there any other questions? Representative Meredith.
Thank you, Mr. Chairman, and I would echo your comments about those smaller banks, as the regulatory burden at the federal level, and I say that very clearly, that's a federal regulatory burden, continues to change through different administrations. it gets tougher and tougher on those smaller banks in the market to continue to perform and be able to meet those regulatory burdens. What I wanted to ask you about, though, Deputy Commissioner, your chart about median sales prices for new homes or new houses sold, that is a national chart, correct?
That's correct.
Have you got any Kentucky-specific data on that? Because certainly I'm in a market that is growing constantly right now, but I would expect that we're not seeing the same kind of decrease in our state right now that we're seeing at the national level.
I think that's correct. I will get you that information. I don't have it on hand right now, but I don't suspect that it's $30,000 in a month. But I will commit it to getting that information when I get it.
Thank you very much.
Representative Meredith, I'll agree with you 100%. In the building business, the market is starting to slow and you're seeing it change, but Kentucky didn't have that big increase. That average house, $436,000 is probably just 1,100 square foot house if you take the entire nation across the board. So, our price range of a 1,300 square foot house in this region is probably $240,000 or $50,000, somewhere in that range. And so we haven't seen that huge increase, so we won't see that dramatic decrease. But the market is going to shift, and I haven't seen rates really that when you showed that 6.7. I really haven't talked to anybody that's the rate on a 30-year fixed rate loan has climbed that much yet. But we are seeing that they're in the mid to upper fives. And I told people I had some closings and people locked in a 30-year fixed rate mortgage for like 2.9%. I was like, man, don't expect this to last too long. I don't know how anybody could expect it to. And so I think the market does have to stabilize, but costs are a big scare. So we appreciate you being here today. Are there any other questions? Representative Meredith.
And I just follow up to that. Like you said, I checked 30-year fixed rates right before I left the bank earlier this week, and I think that was yesterday. I think mid-fives is where the 30-year fixed rate was that we're pricing right now through the secondary market programs that we have. I think the chart or the graph that you had that talked about mortgage loan originators and the licensing going down significantly, that's to be expected in the market that we're in because there's no refinances anymore. September of last year, I refinanced my home at 2.875. And now we're at 5.5 on the same loan, and so those refinances are gone altogether, and that's significantly dropped the volume on what we're seeing in the secondary market programs.
And we're seeing that too anecdotally with some of our mortgage loan companies and brokers. We're seeing them either lay off or repurpose those workers to do other things within those industries. So
that's exactly right. Representative Smith.
Thank you, Mr. Chairman. I'd like to touch on your crypto comment. I believe maybe this time last year we had a discussion on it, and the banks came in and were talking they had no interest in dealing with crypto in the state. Do you think crypto's here to stay?
I do. The technology behind cryptocurrency, blockchain technology is, it's revolutionary, really. It's going to cut a lot of things out in the plumbing system for a lot of payment systems and probably security settlement as well. It's here to stay, at least in my opinion. It's just where does it belong? I think it's the question that regulators, not only us as the DFI, but federal regulators are wondering as well.
Follow up, Mr. Chairman. So with SWIFT being the largest transfer of currency, I guess, in the world, blockchain, they're now looking into blockchain. I think they're open-minded with blockchain. And so I guess my question would be then, where is the state at as far as looking into, since you've said it's here to stay, you've got the belief it's going to be part of our currency, or it's going to be part of our business transactions, which I have some familiarity with Ripple, some different ones that's probably one of the largest in overseas transactions and in wires. But is the department open now for looking into, because I can walk into a convenience store in Kentucky and they'll have a Bitcoin ATM. So where does the state stand now with it was a closed mind last year. Is it more of an open mind now to start looking at our bank's usage?
I wouldn't categorize our position as closed mind. I think that, we've put out guidance on the non-depository side as far as money transmission goes. telling them they need to get licensed if they're doing certain activity related to that. On the banking side, if any state chartered institution that wants to get into the space right now has to approach the FDIC to get into the space. And from what I know, that has been a non-starter on the FDIC kind of realm. But on the security space, as I mentioned with Celsius, we've actually asked them to come in and get registered. So I think that we're open. We want to create an open regulatory environment for them, but we also want to an even playing field across whether you're having it in a bank or you're a securities firm buying and selling it on behalf of clients. We just want to make sure it's in a appropriate regulatory environment and that there's no sort of benefit by choosing one avenue over the other.
Well, you had mentioned the Howey test, so you've gone to the determination of what the SEC looks at. And I'll close with this, Mr. Chairman. I guess what is probably frustrating on the state side too is that there's no federal regulation. So if you don't have it in the federal side, it's kind of hard to start it on the state side. That's the reason I wanted to see maybe where your mindset was from what Kentucky was looking to do, but I appreciate your comments on it.
Okay, thank you. And can I just respond to that real quick? So the Celsius, that was a particular product that they were offering that was deemed to be a security. I wouldn't say that all cryptocurrencies are securities. It's just what they were doing, by offering deposits and trying to pay, a yield or, a percentage interest rate on that. That is when it turned into security. So not all, we at the state don't deem all of them securities.
Well, we appreciate your testimony today, Deputy Commissioner, and I always look forward to more of those in the future. Thanks, sir. I think our next guest up is Department of Insurance update, Ms. Sharon Clark. Commissioner, it's always good to see you. Just identify yourself for the record, and you can get your testimony started. Turn your mic on.
That helps, doesn't it?
Yes, ma'am.
I'm sorry.
Yes, ma'am.
Anyway, it's nice to have this opportunity to be with you all today and to report not only on the department but on the insurance marketplace in Kentucky. And I can assure you that that marketplace is very strong. Since my return as commissioner in January 2020, the department has issued 202 new certificates of authority to do business in the Commonwealth. And that is quite a bit. It is impressive. There's 18 different categories for these new companies, ranging from risk retention groups to the traditional companies. But many of these new emissions have been what we call insure tech. You've heard financial tech, now we've got insurance tech. And it can best be described as the innovative use of technology. It's altering all the business models, the competition landscape. It's going across all the channels: distribution, marketing, product design, underwriting, claims management. And as regulators, we do not want to stand in the way of innovators, but we also want to work to make sure the privacy of the policyholders is protected. So we're continuing with this issue, and I don't see any slowdown as this marketplace evolves. The department thanks you for the data security legislation that we had last year, and that helps us with this effort in protecting this information. Now, with the addition of new companies, additionally, there's new work. So it's been a very significant workload increase on the department, particularly in our property and casualty division, because all of these new insurance companies have to make their filings, what they're going to be selling, their product filings, their forms, all of that has to be submitted to the department for review. So that was property and casualty division. Let's talk about health insurance rates for next year. We've approved those rates. They're posted to our website. And I took the time to look at all of the states across the country to see what the increases were going to be, because we all know health insurance does not decrease. And on a national level, the ranges are 6 to 12%. In Kentucky, our 4 carriers in this market of individual coverage, the increases are 3.4 to 7.1. So when you compare that to the national range of increases, we're in good shape there. In the small group market, we're again on the lower side. The national increases range from 4.48 to 9.1, and in Kentucky, we're lower than that. So that was good news. Also, some additional good news is for our Kentucky employers. For the 17th year in a row, our workers' compensation rates are going to be decreased. Overall, it's a decrease of 6.8% across all categories. That includes manufacturing, office, clerical, contracting, goods and services, etc. Surface coal mining shows a decrease of 2.2%, but there is an increase in underground coal mining following the trend for the last several years, and that increase is 3.5. But as I said, this is good news for Kentucky employers. I'd like to now talk about our licensees. You know, we use that term somewhat interchangeably. We issue certificates of authority for companies. Licensees are the people like adjusters, brokers, viatical settlement brokers. When I returned to the department, we had 250,000 licensees that we keep track of, and that's quite a bit. I will tell you that that number, as of October 10th, has grown to 321,271. It's been an increase of 29% in the number of licensees just in the last 2.5 years. So it just reiterates the fact that we do have a strong marketplace. People are wanting to do business here. They're wanting to be licensed. So those numbers, again, are good news. Now some unpleasant numbers. Unfortunately, fraud in Kentucky, insurance fraud, continues to be an issue, as it is across the country. The Coalition Against Insurance Fraud indicates that fraud costs businesses and consumers $308.6 billion with a B a year. The FBI estimates that the fraud costs increase the average family's cost of insurance by $400 to $700. At the department, we have a insurance fraud investigations division. These are all sworn police officers and with the administrative support. We receive referrals from the companies. They're required to do that. We sometimes discover referrals just from consumer complaints we get, and as we delve into those, we develop the cases, we investigate them, we provide what we call a local prosecutor's notebook. We have all of the information available for the local prosecutors. The cases then are prosecuted as determined by the local jurisdictions. Most of our cases, and when I say most, we have a 90% rate of when a case is presented and goes to trial that it ends with a guilty plea, probation, and restitution. In 2021, we had 2,118 referrals. 843 of those were from Jefferson County. Fayette County is our second highest county, and then the last several years it's either been Christian or Warren County that has been third place. One of the unfortunate things when catastrophes hit the state, we know that insurance fraud follows, and that was the case in western Kentucky with the tornadoes. Immediately following, storms bring out the worst, and they bring out the best in people. But we had a lot of issues that crept up. I was down in western Kentucky the week afterwards. We had everything from individuals coming in and loading up vehicles on flatbed trailers, trying to get out of town with them. We have several cases where we had, of all things, tree services. One lady that we spoke with had trees down in her yard, and a tree service came by. She signed it for the service to be provided. They were there working a day and a half, and she received a bill for $57,000. She was told, your insurance company will pay for it. Those issues are very disturbing, and we are now involved in several investigations with those tree services, and we've had to pull the FBI involved with it because these same tree service, believe it or not, has committed fraud in multiple states. The trending types of insurance fraud in Kentucky are chiropractic complaints in Louisville. Those are usually related to staged automobile accidents and involve the PIP coverage. We have a lot of roofing complaints of man-made damage where there has been some damage, but then contractors or other individuals do more damage. And we also have a lot of workers' compensation fraud as well as slip and falls, among other issues. When I talked about the fraud referrals that we get, I mentioned some come from consumer complaints. We have a consumer protection division, and they are the ones that answer that phone, taking complaints, answering questions. They're also the division that goes out on site with disaster response. Last year, we had 8,970 complaints that we investigated. We recovered over $13 million for our constituents here in the Commonwealth. So I'm very, very proud of those numbers. As I mentioned, we went out on site after the tornadoes in western Kentucky, as we always do, and we had 8 teams that were out there, and we have continued to make visits as late as last month. We were down there again. Our other work with the tornadoes efforts is we have had to do a lot of data research in order to try to get some of the tornado assistance funds, the premium funds and whatever to those individuals. And the good news on the tornado, if there is some good news, there were 12,443 insurance claims as a result of that storm that we know of thus. I am in the process of getting year-end information for you all. Of those 12,443 claims, we only received 44 complaints against insurance companies. What does that tell you? The insurance companies, I am proud to say they were in there, they were doing their jobs, they were in there as soon as the day following the storms, providing alternative living expenses. The insurance agents stepped up. I met many agents down there whose own businesses were destroyed. They were setting up satellite stations and addressing, the needs of the community. So it was a difficult issue, but the promises that were made by the insurance company were promises that were kept. The flooding in eastern Kentucky, as you all may know, the National Flood Insurance Program is responsible for flooding issues, but we have been involved with all of the comprehensive claims that were involved with automobile and vehicle coverage, and we continue to provide support to them. And as a result of the many storms that we've had, and we call them cat storms if they're catastrophe storms, the tornadoes, the flooding. But there's also a term in the industry, it's called the kit storms, as in kitten storms. Kentucky has had a tremendous amount of kit storms as well. Storms you might not hear about, hailstorms that come through that might hit one county. But we are seeing rate increases being filed. And that is totally understandable due to the huge amount of claims that have been paid in the Commonwealth this past year. Now, I'd like to give you an update. I always try to do this with the legislation. You all pass the legislation. You expect us to do our job, and I want to give you an update on what we've done with that. As you all know, Senate Bill 140 with the step therapy on the drugs, that protocol was passed. The department is amending 2 of our regulations to incorporate the changes to enforce the provisions, and we have filed those regs on October 15th. Additionally, though, the department has had to contract. We do not have that clinical pharmaceutical expertise we need. So we have entered into a memorandum of agreement with the University of Kentucky College of Pharmacy to have clinical pharmacists available to help us with any technical issues that we have. So that has worked out quite well. On House Bill 91, the military spouses update, The department has filed the amendments to our regulation on that includes the exemption of the payment of licensing fees. So again, we're addressing those issues. The data security update, I mentioned that earlier. That was our legislation to try to draft some alerts, and there's some consumer protections. And again, the administrative regulation has been drafted. Also on the healthcare trade practices, House Bill 370 that addressed the dentist reimbursements, we have amended our internal review process in our health so that we're prepared to review those provider contracts and make sure that that bill is enforced. I do want to take an opportunity to say that the department, we greatly appreciate the help that we've received from this committee. We appreciate the LRC staff and your all's work. And I would be remiss if I did not give a special thank you to Chairman Rowland for the help that he has been to the department. So with that, Mr. Chairman, I am available for any questions.
Well, Commissioner Clark, it's always good to see you. Appreciate that. I think Co-Chair Rowland actually has the first comment or question.
Thank you, Commissioner Clark. It's always good to have you here, and I want to reciprocate that thanks to you, whether it's been calling you about legislation here or just simply calling you about issues I've got going back on. And in my independent insurance agency, you've always been extremely helpful. Just a question regarding the fraud. Since I've been serving on this committee and in the General Assembly, we've done several things legislatively to curb fraud here in Kentucky, whether it's around roofing issues and storm chasers or immunity by reporting to the National Information Crime Bureau, towing legislation. I guess what else does the department think that we can do, or is it simply at this point down to an enforcement and prosecution issue?
That enforcement and prosecution, but unfortunately, as probably all of you all recognize, criminals are very innovative type people. And sometimes, when you plug the hole on one end, there's another way that they get around it. But what we're seeing is a lot of the fraud is a much larger scale. Maybe the numbers have gone down. And I use that tree service for example. It was not a multiple tree services, but it was this one, and it has created, again, there were many issues with this one. So Chairman Rowland, as they come up, we will certainly ask for the assistance of this committee to help us address those.
Representative Hatton.
Thank you, Mr. Chair. Thanks for the update on the number of claims in Western Kentucky. I represent extreme Eastern Kentucky, and I know that there are way fewer claims from Eastern Kentucky flooding because no one had flood insurance, as we've learned. So I'm wondering if you have a total number of claims from Eastern Kentucky and whether the Department of Insurance has identified anything that we as a legislature could do to encourage availability and affordability of flood insurance, or whether that's anything that you're looking at.
Well, as a whole, as the National Association of Insurance Commissioners, we are certainly working with the feds, on the National Flood Insurance Program. Unfortunately, that program, it seems like every year has to be at the last minute, refunded. And it's not just here, Representative Hatton, it's just been so many claims with, I hate to think what the flood insurance claims are going to be out of, Florida with Ian that just hit. It's interesting to note that I think that a lot of the area in Eastern Kentucky that was hit with the floods was not even considered to be in the floodplain zone. And so even if there had been issues of maybe affordability, people, it might not have even considered, purchasing. I do not have the total number of claims from there. Again, most of those are going to be, on vehicles. It's interesting, most insurance companies, you have up to a year to submit your claim. And that's why I don't even have, final claim information for the Western Kentucky. So we'll get those, and I'll update at a little later time. What can be done? It's extremely expensive. and it's out of the reach of a lot of people. And it's, again, unless you have, usually if you're in a floodplain and you have a mortgage, you're required to have it, by that lender. But a lot of people just don't have the ability, to purchase it.
Yeah, I think that's a good statement. Is if you're in a floodplain and you have a mortgage on your property, that your lender is going to require it to be, or you can't close your loan, or you can't close on the property. So I think a lot of the folks that were probably, if they were in a floodplain, they probably just didn't have a mortgage on their property at that time. That's why they didn't have it. And I think so many of my friends from that area, a lot of people just weren't in the floodplain. So when they called you and said, when your insurance agent said, well, you want to add flood insurance, you're like, well, why would I get flood insurance? We've not flooded here for 80 years. Why would I want to spend that $1,000 a year to do it? So it's one of those deals that's kind of hard to figure out. Senator Girdler has a question or comment.
How you doing, Commissioner?
I sit there.
For the first year or two I was here, I was called PIP because I ran 2 or 3 PIP bills and screamed and hollered and cried and told why we had fraud in Jefferson County. And it's still going to be a problem no matter what the Hospital Association thinks or the attorneys think. It's still a major problem in Kentucky. If I'm understanding you correctly, $3.8 billion plus our consumers are having to spend out of their pocket for insurance because of fraud. And PIP, if I understand it correctly, Florida tightened their PIP laws, and all the Florida people that were looking money for nothing moved to Jefferson County, and with their attorneys and some of the shady chiropractors. And I think that if you look at all the things going on with it, PIP is one of your major concerns or major issues that's causing us to pay out so much money. We give $10,000 and carload of people at 6, and they got it staged and hit it in the rear, and you got 6 people going to the chiropractor at $60,000. You got the attorney in the same chiropractor's office that's got 6 BI claims, bodily injury claims. So are you seeing that a lot of the fraud in Jefferson County and surrounding areas is related to PIP?
We are seeing in Jefferson County is by far where the staged automobile accidents. We don't see that in the rural counties, and we're not seeing as much in Fayette. And it is a significant amount.
Yeah.
And it's, the PIP, that's for your body to address, if there's any PIP changes in Kentucky, but that is an avenue of fraud that we see.
Yeah, well, I took a blood bath for a couple of years over it, and I had to have a blood transfusion, and I may have got some attorney blood in me. I don't know. But the thing about it is our consumers are paying way too much for car insurance in the state of Kentucky. If you go anywhere surrounding us, and as these Big I and the insurance people here will tell you, the other states that surround us, their insurance is probably 20, 30% cheaper than ours. And there's one reason: no fault in the state of Kentucky. So I think we still need to do something. But I just, when you touch on that, that's kind of a sore spot with me, because I think we should have been passing it 4 years ago. But I do thank you. One of the things I'm hearing from the insurance people, if you bill somebody over 25%, you got to give them 75 days notice. And some of the things we're getting, inflation, that's 8, 10%, and then inflation on top of that with the tornadoes. I'm hearing that the rates are going to go up 20, 25% just based upon lumber and based upon the things that it costs to buy. And when you start going up that much, along with the fraud and the things that's going on here, our consumers are going to be hit drastically with this inflation cost, drastically. And it's going to be a pain for them to be able to afford car insurance and home insurance and things of that nature. Are you seeing that they're asking for much larger increases now than they have in the past?
As a little background, Senator, Kentucky is a use and file state.
Yeah.
And if an insurance company submits rate increases that total over 25% for a year, the department goes through an actuarial review of those rates. For example, we have had one company that filed a increase earlier this year, then they filed a second increase, and the total did surpass that 25. So I sent that out. My actuaries, who have worked with the department for numerous years, have a good knowledge of the Kentucky marketplace, what have you, recommended to me that I did not approve that rate increase. And that is the position that we're going to take. They do justify a certain amount, but I think the justification that the company submitted, the rate increase was going to be like 25.6% cumulative for the year. We're going to come back and we would be willing to approve 11% increase. So my ability is when it hits over that 25 is when I can get in and what I call scrub the rates and make some disapprovals then at that time. But the rates are going to increase. And you hit the nail on the head. The inflationary cost as well with building supplies has just increased it. And I touched upon the complaints that we had from Western Kentucky with the tornadoes. And many of those were people who had purchased what we call actual cash value on their homes versus replacement value. So even though their home was totally destroyed and they had the full payout of their policy, when it came time to turn around and build that home again, just because of the inflationary cost of the building materials, it was going to cost maybe an additional 15-20%. And we needed to explain to them that, there is an option that you can choose called actual replacement value or an inflation guard that would have given them that full coverage. So it's the inflation is having an impact on the rates and the costs, sir. You're correct.
Thank you.
Thanks, Senator Girdler. I've got a song in mind I wanted to say to you, but I'm just going to be a good boy and be quiet and say appreciate your comments. PIP is an issue that we continue to address, and we're going to talk about it in future sessions to come. I know it's been a tough one, and we appreciate your work on it. It isn't easy. Commissioner Clark, would you have any other questions or comments for you?
No, I just want to make the offer. The department's always there to provide assistance. If you all have legislative proposals that you're interested in or you want some additional background on it, we're always there to help. So please reach out to us. And then also please know that we're there every day to answer any of your constituents' questions or concern or provide help however we can. So I thank you all for the opportunity to present today.
Thank you very much. Our next discussion is about insurance issues that are affecting agents on the agent perspective. We have Tara Purvis, with the President and CEO of Big Eye, Kentucky, and Wes Bissett, Senior Counsel for the Government Affairs for the IABA. So appreciate you all coming. Introduce yourselves for the record, and look forward to your testimony.
Thank you, Mr. Chairman, members of the committee. My name is Tara Purvis, and I am President and CEO of Big Eye, Kentucky. And I just want to kind of go over a little bit of what Big Eye, Kentucky is really quickly before turning it over here to Wes. So let's see if I can do this. Big Eye, Kentucky is the oldest and largest independent insurance agents association in the state. We've been around since 1896. We celebrated 125 years last year. And as we are doing today, we also had a dinner last night. Thank you for all that came and joined us. We advocate on behalf of independent agents here in Kentucky and in Washington, D.C. So other things that we do, we educate our members, and we also bring them together networking and with their colleagues at events. And then we also do management tools, different things for their small businesses, and we help with 90 plus products and services for those independent insurance agents. A little bit about us. We have 350 member locations, representing about 5,000 individuals in the state of Kentucky. We cover the entire state from Pikeville to Paducah. We have many small one-person agencies, but we also have agencies that are as large as 100 individuals. And 84% of our membership, the agencies themselves are members, and so they have less than 10 employees, and 65% have less than 5 employees. And you can tell here by our graphic that we have about 500 members that are under the age of 40, and then 1,500 members over the age of 60. So we are also in trying to recruit talent into the insurance industry, like just about everybody else. So we have 14 board members all over the Commonwealth, and we have 6 staff members. As you can tell, we are very blessed to have independent insurance agents in the legislature. You can see here that most of these are independent insurance agents. We love all insurance agents, and we will definitely accept Senator Girdler into that mold. But we have a couple of years ago, we gathered together as a government affairs committee, and we got these guiding principles in order to determine what we come to the table for, what we fight for, what we look for when it comes to legislation and protecting agents and consumers in the Commonwealth. So these are some of those principles that we have determined. And I also want to give a big thanks. Commissioner Clark did as well, but 2 of the major things that we were looking for last session were accomplished thanks to you, the Department of Insurance, and for all of the consumers in Kentucky. We did the data security model and the rebating reforms in 2022. As far as the upcoming session, we do not have any legislative agenda unless anything appears. And some of the things that we're looking at in the future, like I said, we do have a talent crisis in independent insurance. And so we're looking at some apprenticeship incentives. Chairman Rowland helped us get an apprenticeship program inside of the Independent Insurance Agents of Kentucky. And so we're looking to help employers throughout the Commonwealth get apprentices in the high school area and try to grow your own insurance agent or your customer service representative inside your agency. And of course, one of those things is PIP reform as well. So those are some of the things that we have on our radar. I'm going to turn it over now to Mr. Wes Bissett, and I'll have you introduce yourself.
Thank you, Tara. Thank you, Mr. Chairman. I'm Wes Bissett. I am Senior Counsel Government Affairs for the Independent Insurance Agents and Brokers of America. It's a pleasure to be with you and an honor. As Tara sort of alluded to, we normally come to a hearing like this with a long list of asks, but in large part to the productive and effective work of this body over the last few years, we really don't have any along those lines. I think it's a tribute to you, a tribute to the work that Commissioner Clark and her team does as well. So without a list of sort of pressing issues along those lines, what we thought we would do would be to highlight a couple of topics that are coming up at the National Council of Insurance Legislators. These may be issues that might ultimately come to Kentucky in the near future, so we wanted to highlight a couple of things. Coyle, or I should say Kentucky, has been an active, a state that's been very active in Coyle over the years, including in leadership capacities. Representative Fisher has been an officer at Coyle. Chairman Rowland is the current chairman of the Property and Casualty Insurance Committee at Coyle over the last several years, and Coyle is certainly going to miss their leadership once they leave the legislature. And I know some of the folks in this room will probably be stepping into leadership roles at Coyle in the future. But I wanted to mention 2 bills, 2 proposals that Coyle will be taking up next month at its annual meeting. And the first is the Delivery Network Company Insurance Act. And this is a proposal introduced and sponsored by Representative Rowland that would establish insurance requirements for delivery network companies. And you may remember there were, first we had transportation network companies. This is, Uber and Lyft, and now we've got delivery network companies. This is Grubhub and DoorDash and Uber Eats and that sort of thing. And the reality is that there's without action by legislative bodies, there's going to be a coverage gap that exists because the typical personal auto policy doesn't provide coverage when a driver's out there using the personal vehicle, delivering food or whatever it might be to someone's home or some other location. So the core element of Representative Rowland's proposal is that it would require these platforms, these DNCs, to ensure that there's coverage in place, either through the DNC itself or through the driver, some kind of combination thereof. And then if there does turn out to be a gap, it's the DNC that's on the hook for any claims that might arise as a result of the driver operating while the app is on or delivering something along those lines. So it's very similar to what happens in the TNC context, but it's also a good example, this proposal, of how the state regulatory system is responsive to new things that, new challenges that emerge in the marketplace. We wouldn't even have thought about a DoorDash, 15 years ago maybe, but it's something that's new. So Representative, we appreciate your work on this. Support the proposal. You've got other proposals, I know, at the end Coyle meeting, and so we appreciate your work on this and the sandbox proposal as well. Some that you've already passed, the legislature's already passed here in Kentucky. The second bill I want to talk about is our proposal to end Coyle, is the Insurance Underwriting Transparency Act, and this is a proposal that's been introduced by the Indiana House Majority Leader Matt Lehman. He's the most recent past president of Coyle. He also happens to be an independent agent and a member of the Big I. And his proposal is a response to the nature in which personal lines insurance underwriting and rating has become increasingly complex. Companies are using analytics and vast new and different types of data in rating models that, again, that are much more complex than what we've seen even in recent years. And so the manner in which rates are established now is increasingly complicated, and in some ways, as a result, increasingly opaque to the typical consumer and to the agent. And so, rates are often generated now in the personal lines context by running a person essentially through a model, and sometimes the results that come out of that, the outputs, on occasion defy sort of intuition, right? It used to be that rating and underwriting was somewhat intuitive. If you had a lot of wrecks in the recent past, or you added a teen to your policy, you could expect your rates to go up. But with these complex and opaque algorithms, you sometimes scratch your head wondering, why did my rate just increase 20%? And I can't get a good answer to it. A lot of times these customers will come to the agent and say, well, what happened? I have no appreciation for why my rate jumped like that. And agents oftentimes don't have an explanation for that. And the agents will call their company contacts, their company underwriters, and say, why did my good client's rate just increase in that way, in a particularized way above the statewide average? And those company underwriters don't really have a good explanation, and they're told it's just the black box. That's what the black box says. So what this model would do is bring a little bit of transparency to this process. It would allow a customer that has been non-renewed or that receives a significant increase in their rate at renewal to request a list of the factors that were most heavily weighted in that decision. And there are lots of reasons why this is important. It allows customers to have a basic understanding of how the rates were set. It allows them, if there's information that might be incorrect or inaccurate, to potentially clear that up and to basically improve their outcomes potentially, and also to kind of help restore faith and trust in the insurance underwriting and rating system. Because when you have no sense for why a rate is being generated, it does have the potential effect to undermine that. I'll also say this is not a new or novel concept. About 25 years ago, we saw something of a revolution in the insurance underwriting and rating process when companies began to use credit histories and credit information to set rates. So what happened back at that time was Coyle adopted a model that just dealt with that issue, a very comprehensive model. It's been adopted universally by nearly every state, and one of the provisions in that act says that if you're the subject of an adverse action, you will get a list of the factors that resulted in that from your insurance carrier. So all that Representative Lehman is trying to do with this proposal is to keep up with the times. New types of underwriting information are being used now, so extending what's already the law of nearly every state to those types of data. This is also commonplace, and you know this, Mr. Chairman, maybe better than anybody, in the lending context, that if there's an adverse action taking in connection with an application for an extension of credit, that that lenders have to disclose the factors that most heavily weighed in that decision. So I've talked about this in sort of broad terms. I will say some of the final details are still being worked on. The original proposal would have required this type of disclosure to be made anytime there's a significant rate increase. This is being sort of now the approach that's being taken is it would be something that consumers could request if they've had a rate increase like this. We also were working to make sure that the penalties for noncompliance aren't unnecessarily and unduly excessive or punitive. And we also want to make sure that companies in any state where this might be adopted have enough lead-up time to make sure that they can implement the changes that are needed. So to the legislators that are going to the next Coyle meeting, we'd urge you to support this. Even if you would have no intention of pursuing something like this in Kentucky, we would urge you to support it. And part of the reason why is there are lots of other states that are starting to look at this issue in much more prescriptive and broader ways. There's a regulation proposed in Washington State that's very prescriptive and would require companies to disclose every factor that they utilize in the rate-making process, which would mean dozens of factors being disclosed to consumers, and it would really be overwhelming. The NEAC has been working on proposals like this, and we know that there are individual legislatures that are starting to take it up. So having a template, even though if you weren't going to bring this back to Kentucky, would be incredibly important, and we would urge your support for that. And perhaps after we see its adoption in other states in the coming years, after the benefit of that experience, it may be something that you want to contemplate adoption of here in Kentucky at some future point. So with that, I'll stop. I know my colleague and friend Chris Nolan's going to be talking about some issues from a company perspective. We are in alignment with them on a number of those, but I'll stop there in terms of things we're focused on, and appreciate the time, Mr. Chairman.
Thank you. Appreciate the testimony. It's very valuable. Representative Chairman Rowland, I think, had a question or comment.
Yeah, just more of a comment. Just to thank Tara and Wes for being here today. Obviously, I'm a big advocate and a huge fan of the independent insurance agents. And as I said last night, without my involvement in your organization, our organization on the Young Agents Committee and traveling to Frankfurt, and D.C. back in the day, I likely wouldn't be here. And to Wes, I've known Wes longer than I've been in the legislature. So Wes is a good friend. And kind of the issues that have piqued my interest over the last few years have been the innovative and the insurtech type issues. The stuff, as Wes said, that we didn't think, or even, 15 years ago, we had no idea that these would be issues that we would be talking about, and whether that's delivery network companies, transportation network companies, or the sandbox. Wes has always been willing to help me with those issues and help us work those out, so thank you.
I appreciate that. As I said before, I think it's a testament to the state regulatory system. There was a mention made earlier to federal inaction on certain issues, and I think the fact that legislatures like yours are able to be responsive and proactive is a tribute to the system we have. So thank you for your leadership as well.
I don't think there's any other questions now, and there may trigger some after the next group comes up because I know it's a kind of similar issue. So appreciate you guys being here.
Thank you very much.
Thank you. And dinner was good last night. We appreciate that for everybody. Our next group is the Insurance Institute of Kentucky Legislative Priorities, and that's Mark Trish, the Executive Director, and Chris Nolan, Government Affairs Consultant. Guys, introduce yourself for the record, and appreciate you being here.
Thank you, Mr. Chairman. Chris Nolan with the Insurance Institute of Kentucky.
Mark Trish, Executive Director, Insurance Institute of Kentucky.
And wanted to begin by just taking a moment to thank Commissioner Clark, who was here, and for all the work that she's put in during these trying times that we've had here in Kentucky. It's been difficult for our insurance companies as well, but we've collaborated well with her and with the department in terms of sharing information and data, and we certainly appreciate that collaboration. We wanted to outline our legislative agenda for the next session coming up. It is relatively brief, but as you've seen from comments earlier, it's a bit complex. We have 4 or 5 issues we want to mention here briefly today. Mr. Bissett has touched on a couple that I'll comment on as well, but we wanted to start with what is and has been our continuing number one priority for the insurance industry, and that's been distracted driving. And it is a enormous public safety problem for the Commonwealth and for other states around the country that have adopted distracted driving legislation. And I want to turn it over to Mark to talk through some of the things that our industry supports.
Okay, thank you, Chris. Mr. Chairman, ladies and gentlemen of the committee, I'm not going to go over the details of the bill. We presented essentially that same bill. It was one that Representative Tipton sponsored this last year. This committee heard it during the session for discussion only. We plan on bringing back that, working with Representative Tipton to bring back that same bill this next time. You've heard about it, so I don't really need to repeat, I don't think, the provisions of the bill. I do want to just emphasize several things about the bill itself. One is that we view this bill as one that does not focus on its punitive nature, that is, issuing tickets or let's find people doing something wrong. Rather, it's about building good safety habits. Distracted driving is a serious issue. That's why my members urged several years ago, we came to a strong consensus that distracted driving is a growing problem. It's affecting their policyholders, your constituents, and is very much a safety issue. And we view legislation like this, which would require the hands-free use of a cell phone, as one that would build good habits. And the law sets fences, it sets boundaries. And so, with that, with passing that legislation, you can send a message that we are trying to do something about cutting distracted driving. When you think about seatbelts, seatbelt usage is pretty much automatic. It hasn't always been that way. Seatbelt usage has grown over time, especially with seatbelt legislation. As most of you know, I sat where you're sitting once upon a time. My freshman session in the legislature in 1994, we passed Kentucky's first mandatory seatbelt law. And I believe that has done a great deal to increase seatbelt usage in Kentucky over that time. It was fairly controversial then. We heard a lot of the same arguments then about seatbelts that we hear about hands-free use right now. So it is very much a safety issue. Frankly, the laws have not kept up with technology. We have texting laws in place, but I think those texting laws go back to when a lot of people were using cell phones, and you would have, young people could, or older, that would flip open and just, use their thumbs to, when you had to hit the key multiple times to do texting and so on. That's probably the era that our laws came from. Now, people can broadcast videos, record videos, watch videos while they're driving down the road, and basically the legislation that we have would do something about that. It would keep up with the technology a little bit more. The other thing that I would say about it is your constituents are in favor of this. We had the Mason-Dixon poll do 4 questions for us in January of this year, and I was actually kind of surprised by the results because it came out overwhelmingly that people favored a hands-free law and they thought it would do some good, more importantly. So I will say your constituents favor it. I think there's been a lot of concern about penalties. That's one of the first things I mentioned. We're not looking to build, a mousetrap or a speed trap type thing. We're certainly willing to talk about the penalties, the phase in, how those penalties take place and so on. We're willing to discuss that, but as far as the basic underlying premise of a hands-free law, we are very supportive of that and will continue to work for that. So with that, I'll turn it over to Chris to talk about some of the rest of our legislative agenda, and then we'll be available for questions afterwards.
Thank you, Mark. I'd like to transition now to talk a little bit about underwriting transparency that Wes Bissett so adequately explained the issue that's pending before Coyle that will eventually make it into the states. And while a seemingly simple concept in theory, it's very difficult to create a one-size-fits-all approach to a rate underwriting formula that is very complex and utilized differently from company to company. The early drafts of this model were, quite frankly, widely opposed by the insurance industry for being overly broad and, quite frankly, just unable to comply with its requirements. We believe the free market already provides a remedy to this issue. It's if a policyholder gets a premium increase and a company isn't being responsive to the reasons why, the policyholder and the agent can shop their business to other companies who will be more responsive to their needs. And that incentivizes competition between the insurance companies. In addition, if a company's not forthcoming, there are recourses through the state departments of insurance and their consumer protection divisions and their rate filing process to make complaints, to make those complaints and be more transparent. But among the many concerns insurers have is adding yet another mandatory notice requirement, thus inundating consumers who are already getting many insurance notices. And a great example of this is a recent national survey that just came out of drivers' opinions that found that many drivers don't even understand the factors that impact their auto insurance rates. 24% thought the color of their car impacted their rates. 28% believe their income impacts their auto insurance rates. 38% didn't know that a car's make and model impacts their rates. 51% didn't know that living in a certain state can impact your rates. And 53% incorrectly thought that a simple parking ticket would increase your rates. So, again, a complex issue, but we don't want to confuse consumers anymore by sending out more mandatory notices. However, through our industry trade associations, NAMIC and APCIA, we have provided Coyle with substantial amendments to the proposed model that the industry can actually comply with. And those are pending at the next Coyle meeting for consideration, and we hope they'll be adopted. This is something we could support if it is done in the correct manner, and it's a way that our insurance companies, I mean, you're talking about having to redo all of our internal systems in order to give individualized responses to routine rate increases, and there just needs to be some parameters put around how that's going to work. So, again, it's a work in progress and something that we want to get behind if the right amendments are made to the model. So I want to pivot from that issue now to an issue that is ongoing with this legislature that will be a discussion item for next session, which is litigation funding. IIK and our member companies strongly oppose the third-party civil litigation funding. The legislation introduced last session and discussed this interim provides little transparency and control over this growing way of funding lawsuits. Litigation funding is the practice of a complete stranger to a lawsuit providing funds to a party in a lawsuit in exchange for some of those proceeds of the lawsuit. A loan made under this contract would only be repaid if the party taking out the loan prevails in the lawsuit. Many business interests in Kentucky have long advocated for tort reform in our state, and litigation funding does a complete 180 and takes us in a different direction. We believe this bill creates a new, poorly regulated loan industry with virtually no oversight or no control on fees or contractual obligations, and no one who will actually protect the consumers. Litigation funders often charge around 3% per month, which is an annual rate of 36%. And however, many lenders charge compound interest, which means that the borrower pays an interest on the principal and the accumulated interest. For a 3% monthly rate, that raises the effective annual rate to more than 42%. And previously filed legislation exempts these loans from our usury laws. Proponents of this effort paint the picture that the average loan amounts are relatively small, and they're mostly utilized by victims in car accidents who have no means to access money whatsoever while they're waiting on litigation to be finalized. And while we don't deny that those situations may exist, there is an entire other side to this litigation funding that also has to be taken into account if the legislature is going to consider this proposal. And while I'm no expert on this issue, I do know litigation funding has many international investors and hedge funds that are now managing $12 billion in assets who are playing in the commercial space through large-scale tort and commercial cases, alternative dispute resolution proceedings, and large patent and intellectual property cases. So it extends far beyond the small guy who is in need of a funding gap. And so we urge the legislature to carefully consider the legislation, which is being kind of portrayed as just helping the little guy. There is a big side of this proposal that we can't ignore as well. Overall, we feel litigation funding discourages plaintiffs from settling lawsuits because of the large amounts that they owe. As a result, there may be attempts to negotiate higher settlements just to cover the high loan and fee balances, not paying what a claim is actually worth. This will drive up the cost of litigation, which drives up the cost of insurance premiums for individuals and for businesses. Moving on to two other small issues that we just want to make a quick mention of that we'll be working on this session is the delivery network companies that Wes Bissett very well outlined. The IIK is very supportive of passing this law and making sure that there aren't any coverage gaps as drivers in the Uber Eats, DoorDash, and Buckle universe are out there driving on the roads and making those deliveries that are becoming even more and more or that are happening more and more is what I'm trying to get to. Thank you. So anyway, we very much support that. And lastly, later on today in the Transportation Committee this afternoon, the Autonomous Vehicle Industry Association is presenting model legislation for Kentucky, which would allow the use of autonomous vehicles on Kentucky roadways. Almost 20 states have passed this model legislation, including West Virginia earlier this year, and 10 or 12 other states, in addition to that, have some sort of AV laws, autonomous vehicle laws, on the books. The legislation is supported by much of the manufacturing and trucking industry in Kentucky who want to use autonomous vehicles for trucks to deliver goods from their supplier to their manufacturing plant. And the other use for AVs is in the shared economy space, operating driverless cars for Uber, Lyft, taxis, limos, ride sharing, and that. So those are kind of the two different areas. And the IIK supports this legislation because it's of its potential to dramatically improve safety. And autonomous vehicles do not text while driving, fall asleep at the wheel, drink and drive, and do other distracting things while driving. So we think this is a good step in the right direction. So with that, we'll open it up to some questions and appreciate the committee's indulgence today.
We appreciate you guys coming. You get always full of information and, always good for us to reach out to. So we appreciate that very much. I don't really see any questions, but I know that's Senator Alvarado. I'm sorry.
Thank you, Mr. Chairman.
The post had me blocked.
No problem. They're talking tort reform, so I got to speak up, Mr. Chairman. I appreciate that. So I appreciate a lot of those initiatives. Obviously, that's something that's been near and dear to my heart. I know I get villainized by, I think, an irresponsible legal industry in our state, Supreme Court who hasn't done the right thing on this topic, a bar association that's been irresponsible, really. And I've talked to a lot of attorney friends who agree that a lot of this stuff has really not been good for our state. So appreciate those initiatives. One piece of information is I try to propose a lot of this. The accusation from people who are opponents to those topics are that a lot of what we talk about is this isn't really a problem. This is all, there's no objective evidence to this. This is all just anecdotal comments. I need to get some of that data. So I would ask, please, if you could, whether it be in the healthcare arena, big business arena, whatever, there's a lot of demand letters that are put out there, a lot of lawsuits that are then withdrawn, and a lot of action in that space. I know a lot of our insurance companies have been hesitant to provide that information for fear of disclosing information about their clients. I'd like it just to be blinded, but I just need the information to find out exactly how much money we're talking about, how many lawsuits we're talking about, how many demand letters are being put out there, because it is a massive legal industry in our state. And it's basically a tax on our citizens is what it becomes in every aspect of either doing business, healthcare, you name it. If you could help in that regard, would be great. And then a second idea, and it's an idea, I don't think it's legal right now federally, but with distracted driving, I've often thought about would be cell phone jamming, which I know there's devices that can do that. I don't think they're legal to be used federally is my understanding. But the thought of either maybe talking to automotive industry, having those incorporated in our vehicles, that they can be switched on and off. And if someone has one, I mean, I know I have State Farm for my car. They put a little device in my car to see if I speed, what's my braking like, and they give me discounts on those kinds of things. That might be an initiative to propose for drivers to say, if you've got one of these, if it's used, it's got to be federally legal and all those sorts of things. But if it's turned on, that you're going to have a discount of some sort to drive with those in your insurance rates. And I'd just like to get your thoughts. I don't know if that's been proposed before or not, but I've often wondered about that being something that can be an incentive for people as they're driving.
Yeah, Senator Alvarado, Mr. Chairman, a lot of what you're describing on the distracted driving and what you called cell phone jamming does exist. There are apps on phones. Some are, third-party apps where basically you can't do anything with your phone. It's like a lock screen or whatever, and parents will often use this for teen drivers, that you can't do anything while you're traveling. I know it's not exactly the same thing, but in my wife's vehicle, we have a built-in guidance system. Well, if you want to try to change your destination, you literally can't do it while the vehicle's in motion. You would have to pull over to the side of the road, then change your destination because it knows you're moving and just doesn't let you. So what Chris alluded to before in the competitive marketplace, some insurers do offer discounts for using that type of app, especially when it comes to teen drivers. I think the most difficult part about cell phone jamming is what if I'm the passenger? Then the vehicle's in motion. How does it distinguish whether I'm the front seat passenger or a back seat passenger, or maybe I'm even on a bus or something? I think that's one of the technological difficulties that would have to be overcome, but that's what we were talking about before. And, the point I was trying to make is building habits in people and making it socially less acceptable.
Right, and I know there's a safety factor if if you get in an accident and your cell phone is disengaged and you can't connect, it can affect people getting to you quickly. I've thought about, and that's why I don't know that it's legal to have a device, and it probably would affect other vehicles, et cetera. So, but just the thought, if there's some way, I mean, we've got little devices we put in vehicles now, offer discounts for that, just as a thought to help with that. But on the tort reform front, any data, if you all could help.
Certainly.
I've tried to get that either through legislation, and everybody likes the concept, but they don't want to give me and I need that proof to prove our attorney friends wrong on this topic, because I know what's going on. We all know what's going on. So we just need to have that proof, front, so we can kind of get some of these initiatives rolling.
We can definitely look into providing some of that data that you're talking about.
Thank
And
you.
on the distracted driving, I'll just add, Representative Chairman Rowland had a bill last session dealing with rebating in the insurance industry, and part of that bill was to very clearly specify that insurance companies can use these types of things to incentivize policyholders to put these apps on their phones, and to and it's everything from in your house monitors on your hot water heater to make sure that it doesn't bust and create a claim, to things in your cars and incentivize you to do that, and for us to give you discounts for doing so. So again, we're working in that direction in a lot of different fronts.
Representative Smith, I think, has a question or comment.
Just real quick, I had a constituent get a hold of me in the last few weeks that had bought health insurance. Or do you deal in the health insurance area, or just cars, vehicles?
We are a property and casualty and life trade association. We deal with life issues, property casualty, primarily personal lines, auto, homeowners, also workers' comp. But we do not deal with health insurance other than as consumers.
Okay, the reason I asked, because the name of it was First Continental Life. Not sure if you're familiar with them, but that was the name that they had sold under. You are familiar with them?
I think I've heard of that company, yes, but not particular on the health insurance side of things.
Okay, appreciate it.
Well, thank you all. I know this is going to be some issues that we're going to be talking about this upcoming session, so appreciate your all's testimony today and always working with us. I don't think there's any other major questions, but I do want to say, it's like being able to listen to your own eulogy for Representative Rowland this year. Every time we go to a meeting or something, we are toward the end here. We've all talked about our friendship and his leadership. And last night he received an award from Big I. He received the Lifetime Achievement Award for his work, and I think it just is a testimony to why we all come and serve and do this. I tell everybody it's not a part-time job, it's just part-time pay. And so we have to spend a lot of time involved. And, we all have areas of expertise. And Bart's expertise has been, through the insurance industry. And it really makes a difference being able to have, real-world experience and be able to imply that and apply that to make people's lives better. And so I thought that was a great opportunity for everybody to kind of give him a recognition last night. They did a good job. He didn't even know about it until they started talking about him. So he thought he's getting to hear his eulogy again, is what I told him. So, but he has been a great co-chair. We've had a great relationship of us doing this, and so I've enjoyed it, and he will be missed, and I'm sure there's plenty of people vying to take his spot, and they have big shoes to fill. So Representative Rowland Bart, as I like to call him, you will be missed, but I know you won't be forgotten, because I'm sure we'll be seeing him maybe more than ever now, because he'll be wanting us to do legislation since he doesn't have to do it anymore, is what the deal is. So I wanted to make sure he got the proper recognition. I know everybody has appreciated his work in this body, so Bart, appreciate it. Yeah, they said a beacon of knowledge last night, and I kind of had to look around for a second. I didn't know what that was.
Well, Mr. Chairman, at the Coyle meeting next month, there will be a retirement dinner for both Representative Fisher and Representative Rowland, so it will continue.
Yeah, we are losing two stalwarts, honestly, that have done a great job with this. Representative Fisher being in the same position, so we appreciate their work very much so.
And we encourage you to come to Coyle.
Everybody to come to Coyle. All right. Any other questions or comments? With that being said, I think that unless something crazy happens and Representative Rowland just wants to come back up here one more time, you never know. This will probably be our last committee meeting before session starts. So until